Stock markets in a haze after the crash, but are we simply just in the eye of the storm? And what could we see next? All coming up right now. Good morning and welcome, guys. My name is Dane on this beautiful Thursday morning, the 15th of September. Now, there is a ton to discuss when markets are sitting in this limbo state after a massive move. Investors are scared. Speculation is all over the place. It gives us a little bit more time to focus on the price action. As I've said before, and as I've said many times, price action remains king. And specifically in times of indecision, it allows us just a little bit more time to focus on some of those technical movements. However, we will still consider the news and what everybody is saying and or doing, but it allows us to go back to our roots and really focus on the charts in terms of what's happening. So that's exactly what we're going to do today. We're going to spend a little bit more time on the charts. We spend a little bit more time on the charts. However, we will still cover a little bit of the news. So let's just jump straight in. Let's have a look at what is happening in the world. On the local front, it's the same old. I don't have too much comment on this one. You can go ahead and read this article in your spare time, but it seems like business as usual right here in SA. Now, they're reporting that stocks have rebound after the worst day since 2020. I don't know what rebound they're talking about because I'm seeing something completely different. A rebound is essentially propaganda. It's used to signal that everything's back. A rebound, everything is perfectly in balance. There was no rebound, right? Especially when I see words like that, words specifically used like that, that generally signals to me there could still be worse coming. So are we in that eye of the storm, right? If you look at the center of a tornado, it's perfectly calm, perfectly still. On the other side, before and after, it's absolute chaos. So, when I see articles like this, generally I'm fairly skeptical. You guys know how I do things. So they're talking about a rebound. There is no rebound. The market simply just had that shock movement. There was no correction. There was no retracement. We've hit an absolute floor. As I've said, the worst day since June 2020, about 5% across the board and overall. On the pound and the euro, currently there's articles busy saying that sterling is looking better supported against the euro and the dollar. Now, part of the reason for that is they got better CPI data. Essentially, their CPI data was lower in August than in July. And this essentially hints to the fact that they might have reached that peak, right? That inflation might, stop running rampant, and they potentially could start to see a bit of a pullback in inflation, allowing them to take less aggressive monetary measures. So the current discussion sits at, will their reserve go for that full fat 75 basis point hike, or will they go with a slightly more dovish 50 basis point hike? We're yet to see when they sit down and obviously get together to make that decision. Looking at the S&P 500 heat map, we can see we clearly don't have a rebound, right? We're sitting almost net neutral across the board. You could literally draw a line across all of these spaces, and we're seeing 1% gains, 1% lows. The only real outlier, one item that's really standing out above the crowd, is really Tesla here at the moment, right? 3.5% gain. So Tesla doing extremely well. Amazon probably a noteworthy mention here in terms of that 1.3% gain, but really no rebound, as they've said. Looking at the economic calendar for today, we have a bit of a mixed bag. We've got a bunch of different data that's going to be rolling in over the course of the day. And there's nothing too special here. The only item I'd really pay attention to is this afternoon, 2:30 GMT plus 2. And that's going to be core retail sales. And this again is going to lead to how inflation is busy going, and just whether we are when I say whether the US is actually selling enough goods, right? So that could give an indication of how healthy the market is. The more money people are spending, the more sure they are in their financial position or financial future. Not always the case, but it's a good indicator that when more homes are being built, when more money is being spent, that people feel safe and they feel like the economy is there to support them. So that's going to definitely be something we can pay attention to. And then leading up and obviously counting in some of these jobless claims, this would obviously be something noteworthy and important. Now, previously, the argument has always been for the US and the Fed is that they've got a very strong labor market. The labor market is too strong. There's not enough jobs to occupy all the people looking for work. And so there's an oversupply of employment. And so that has always been the argument. So we're going to see if this data supports that. And should it lead up to the next NFP coming in the first Friday of next month. Other than that, there's not too much else from a fundamental data perspective. So that's going to give us a little bit more opportunity to speak a little bit more on the side of price action. So without further ado, let's just jump straight in and let's have a look at what is happening in the markets and what we can expect for the day. So moving up, first and foremost, we're going to be starting off with the dollar index. Dollar index is pretty much respecting price action to the T. As we obviously discussed and talked about yesterday, dollar index, beautiful bounce off of diagonal support. And if we have a look a little bit closer in terms of that RSI, we've had divergence for a while on the dollar index, right? We've been making higher highs, lower highs on the RSI. And, we're really trying to see here, is the RSI and is the dollar going to break to the downside? Now, leading into what has happened on Tuesday and just breaking down Tuesday's events a little bit better, in terms of those higher CPI numbers, right? CPI came out positive green, which essentially means that the consumer price index, it's costing people more and more for everyday goods. Now, this is obviously not in line with the Federal Reserve's efforts to slow down that inflation, right? They don't want that runaway inflation. They don't want to even hear or move in towards the terms superinflation. So getting that higher than expected CPI data definitely shows that the US is not yet at that peak. They haven't yet started to have 1 month of inflation declining. So the Fed is going to be forced to pull out the big guns next week. They are sitting down to discuss the next interest rate hike. And this could be a big one, right? This is clearly a slap in the face. Papa Powell can't be too happy that, the economic policies that are being put in place are clearly giving the results that they're not looking for. So there's going to be a very big move coming up next week. And I don't know if markets are waiting for that or markets are just literally shaking off that days from Tuesday's massive fall. So we're going to see if we start to see a little bit of momentum move into the markets. We'll then obviously look at where that momentum is going. And that momentum will generally show, what is the general consensus over where price should be. And we're going to look a lot more at indexes for that as well as commodities. They will be the first ones to show us, okay, markets seem to be wanting to correct, or no, the fear is still there and they're still going to sell off. So on and so forth. So that is where we're going to be paying most of our attention. Quickly looking at the Euro USD. The Euro USD obviously had that massive sell-off on Tuesday, and that was the strength of the dollar. But regardless, that sell-off on the Euro USD is that strong dollar, and we're sitting really, net neutral. We haven't really moved from yesterday to today. We're pretty much sitting at the exact same point. So where they're speaking about markets having rebounded, so on and so forth, they're obviously referring to indices and stock markets, but we're seeing a very similar picture across the board today. Looking at USD ZAR, a very similar type of picture that we're seeing. And USD ZAR also pretty much net neutral in terms of that move in relation to yesterday. Having a look here, we pretty much moved, let's see here, about 3 cents for the whole day yesterday. So if this move is not sustained, what can we expect? What is coming up next? So if we don't have a sustained move to the top side, it means we could start to see reversals. And how do we see reversals? We're going to start to observe them on smaller and smaller time frames. So as you can see over here, right, we can see that market structure is slowing towards the top side. We can see that we have a triple top over there, 1, 2, 3, and we can see that markets are pretty much winding out to the right side. So how we would deal with this is we would want to then start to end up making lower lows. The second we start to make lower lows, we could then expect that market's going to start to give us a new direction, which we can then start looking at trading, whether that be to the downside or whether that is a breakout. So for this change in sentiment, you want to start looking at those smaller time frames to get a better perspective over what it is we could be seeing. Now, moving on into the US 30 as well as NASDAQ and German 30, we've got the same thing across the board here. However, NASDAQ is performing slightly better than the rest, but pretty much we're seeing the exact same picture here across the board, right? We're sitting net neutral from the point yesterday. We've got that indecision candle. We can see clearly price action has given us those indecisions, like zero movement. We don't have any push to the downside, neither to the top side. Simply represented as indecision on a daily time frame. So ultimately here, same story applies. We want to be watching on a closer time frame to have a look at what are we going to get here. Are we going to continue a range and consolidation? Because remember, when a market has a massive shock move, what happens? It consolidates, it gathers its thoughts, it gathers, price, it starts to just correct slightly, and then that next market trajectory then ends up happening. Now remember, if we start to consolidate topside, that is a move prepared for another downside move. If we start to consolidate downside, that is a potential move prepping for a breakout towards the top side. Okay, so just keep that in mind if you're looking at those smaller time frames and you're wondering where that is going to go. Just quickly touching on NASDAQ. So NASDAQ had a slightly better day in relation to the others. Again, not a massive day, but just slightly better. We are consolidating towards the top side, which is a slightly worrying thing, as I've obviously said a little bit earlier, because a range like this to the top side is generally a preparation for a break, for the next run, for the next impulse to the downside. So don't necessarily like to see that. If we're looking for a correction, we're looking for a rebound. So we're just going to have to hold on and see what it wants to give us. Now, quickly jumping into our commodities here. We're quickly having a look and starting off on gold. And gold is the only one here really that is giving us any indication of what it wants to do. Now, gold is giving us strength. So we are seeing strength on gold. Gold is currently sitting at that multi-week low. We're sitting at the 2-week low, the absolute low of this little bear run, which also coincides with the low of July and August. So this is going to be something we really want to be paying attention to. And whether gold is giving us a hint here from a structural point of view, we need to obviously look at and carefully consider, if gold is, giving us some sort of hint here from a price action perspective. It certainly seems, right, that could be the case. I'm just going to go to a 4-hour. Right, so we're getting a beautiful support level here. So let me know down in the comments below, what do you think is happening with gold and where do you think it's going to go? Do you think we're going to be in a buy opportunity anytime soon? But ultimately, same story applies. We want to be looking at this on a slightly smaller time frame. So I would be utilizing a structure, something like this, to anticipate some sort of breakout in gold. As I said a little bit earlier, when it came to NASDAQ, right, we're seeing a similar thing with gold. So when you see markets correcting slightly up, right, and you see a range or correction to the top side, it's an indication that markets may want to break downside. Now, how I generally deal with this is I'll essentially mask out that as a little channel. So I'll rise it as a little rising channel, rising wedge, and I will treat it the same way we will treat any other piece of price action. Breakout topside buy, breakout downside sell, but I would be more likely and more keen to look for a downside move. That is the more likely of the two moves. In a traditional sense, we would obviously want a retracement to happen based on a Fibonacci level, but it doesn't always need to be the case. It can retrace 25, it can retrace 50% and then break out to the downside. So not always the case, but definitely worthwhile keeping a note of. Brent, I'm definitely looking for buy opportunities on Brent. We made that quick touchdown to the 61.8, and I was really hoping we could get and have a sustained move to that 61.8 and then start to look for a bigger region to the top side. So we still need to wait out for that, and we'll wait for that to transpire and obviously show us what it's looking for. But I would be definitely keen for looking at a 61.8 buy off of Brent should she get back down to that area, and should we have some decent price action that is going to support that particular move. So that's definitely something we want to all look out for. Now, moving into the crypto space, Bitcoin is giving up that a little bit of an attempt for that breakout that we saw on Monday. Are we ready for a crypto comeback? We obviously know about the Ethereum merge that happened yesterday, and that effect is not being rippled into Bitcoin. And generally speaking, whenever there's a big push in the crypto community, there's generally a general uptick, and especially amongst some of the bigger cryptos, we generally see that celebrated all round. We're not seeing that on Bitcoin at this point in time, and that just could be due to the uncertainty of where the dollar sits. So really, we are kind of hung up and stuck on the dollar right now. The whole world seems to be in limbo, in pause. If you're looking for better trade opportunities, it's far better to start looking at non-dollar related items such as Forex. So Euro GBP may be a really good example. If you're looking for those moves, but not necessarily wanting to wait on the dollar, Euro GBP is giving us some really good price action that is ranging and giving us pretty much some clean levels to start to look at. Our resistance isn't as clean. I would have liked to have seen a concerted effort in terms of touching that resistance level, but Euro GBP is looking pretty for a downside move here. So you may want to then consider non-dollar related items if you're looking for opportunities in the course of today. Until we start to see markets and investors jumping back and giving us some of the momentum, we have a lot more time for price action. So over the course of the day, I will be announcing a special broadcast. I would like to go live for an extended price action analysis. And this is where I'll be extending an invitation to you all. Come and join and jump in with me and drop in your comments. Whatever you'd like to see, whatever your thinking is, you'd like to drop that in there and we can do that together. You can comment live as we're drawing, as we're analyzing, as we're discussing. And I think that would be super powerful. So I'll announce that time over the course of the day. It'll more than likely be closer to the 12 o'clock lunchtime area. So I will announce that in the groups. If you're not in the groups, the link is down below, guys. And if you don't have a Globex 360 live account, where are you and what are you doing? There's a lot of amazing things that are going to be happening, and you need to have a live account to access a lot of these amazing features, whether it be cashback, whether it be Guardian Angel, whether it be our live trading sessions and so much more. You obviously want to have that live account set up and sorted out. The link in the description down below. And as always, guys, make sure you are following us online on social media so you never miss a new update. That is what it is all about. So until a little bit later on, I will announce that live broadcast session. Be safe, trade safe, and as always, remember to do things the Globex 360 way. Until a little bit later, bye.